The traditional financial system created an incredible amount of innovation to create the world's largest regulated Ponzi scheme called fiat money and keep it alive this long. It's been an incredible feat of innovation. It's quite remarkable if we look back in the history books and see all the things that banks and financial institutions innovated to keep the world's largest regulated Ponzi scheme alive. There's a lot to learn from that. But inevitably, there is the roots of it, which is a debt-based, unregulated Ponzi scheme called fiat currency.
Welcome back, everybody, to the Off the Ledger podcast today. Today, we are breaking down the intersection between crypto world and traditional finance with none other than Simon Dixon, CEO of BnkToTheFuture. He started his career in investment banking, and after seeing the shortcomings, he joined the monetary reform movement pretty much since its inception. Thank you for joining us today. Excited to see you again.
Yeah, good to see you again.
Simon, we usually talk every once in a while. It's been about 6 months though, which is crazy.
Yeah, 6 months in crypto is like a lifetime for most people. A normal 6-month life cycle, we'd have cryptos reaching all new time highs and then crashing about 60, 70, 80, 90% sometimes. We'd have a regulatory crackdown. We'd have a few tens of millions that are being hacked from some new exploit, and you'd have a market that's reaching new $1 trillion market cap. So I think all of that has happened since we last spoke in the last 6 months.
That's true. I mean, Simon, you've been in the industry since the beginning, like really, truly from the beginning, the true, OG in the market. What do you think of the evolution today? I mean, as you just mentioned, a whole bunch of things happened in these 6 months, but really 10 years or even more really today has passed. Where do you think we are?
Yeah, well, I'm blown away by the progress our industry has made, to be honest. As you said, I started in the monetary reform side when I left banking and tried to make a difference in the monetary reform side. Got really despondent that no one was really interested, governments weren't interested. And it wasn't until Bitcoin was created that people started to really understand the subject of money creation and monetary reform. And it took Bitcoin creating an alternative financial system, an alternative form of money, until people actually really started to take the subject seriously, to the point today where every single central bank, every single government, every single ginormous entrenched interests, including the largest corporations in the world, have had to all look at monetary reform, whether it be a central bank creating a central bank digital currency based upon what they learned from Bitcoin and stablecoins, whether it be a large organization, multilateral organization like Facebook, or if it relates to a country like El Salvador saying that they have to make Bitcoin legal tender because they want to remove their dependency upon the dollar, in an environment where the US government is printing lots and lots of those dollars. The system will probably be bailed out by a new central bank digital currency. And yet you have this thing called Bitcoin, which started when I first got involved with approximately 40 people in a room in 2011, discussing how this technology could change the financial system. I don't think any of us truly fully believe the impact, although we were all really, really believed that this was something. I don't think we could have forecasted that within a 10-year period, it would have this much of an impact upon so many sectors and so many areas of the world. But yet here we are today. And it's just incredibly exciting to have been involved with that whole movement, from companies that just couldn't get funding because the industry was so weird, to the fact where venture capitalists can't invest fast enough in our industry because there's too many people that want to invest.
So what do you make of the sort of area of Wall Street, these big financial institutions stuff now taking up the space in the crypto space, even blockchain really, but I mean, really their intrigue and interest and introduction into this crypto space, Visa, Square, PayPal, JP Morgan, all these guys. What do you make of this?
I think we're just moving to the next cycle of our industry. So we went from, if you look at financial institutions' journey with our sector, we went from them just completely ridiculing our industry and ignoring it as something that would just be taken out of existence, to having a bit more of a coordinated attack, whether it be, spreading that it's a Ponzi scheme, a currency just for drug dealers, a get-rich-quick scheme, an inefficient suck on the environment of the economy, to something that's just going to be regulated and banned by governments. Eventually, they tried a new approach, which was, well, let's just get rid of the word Bitcoin and let's create our own word blockchain. And the technology behind blockchain is the important thing, and Bitcoin's not important. And we'll all create our own blockchains, and we want to own the blockchains. And that went through a similar life cycle did with, if you compare, say, the internet to the intranet. When they first saw the internet, they all tried to create their own versions and then realized that actually the real innovation is in the open public, Bitcoin, using that analogy. Today, where they've really reached the phase now where this is too big to ignore. If we ignore, our bank's going to be insignificant in the future, and therefore all of our clients are bullying us to offer Bitcoin financial services. All of our competitors are going to take us out of existence if we don't offer these services. All of our pension and funds are saying we need Bitcoin in our pension and retirement plan. And so really they've just been bullied to integrate. And so now we're at the phase where it's them competing with each other in order to decide what services they're going to be offering so that they're not insignificant in the future. Right. And that's an incredible journey that has been through a typical adoption cycle. And really the level of growth that we've experienced in the crypto industry, while many people don't see it as that exciting, but we've gone from nobody knowing who we are to at least everybody in the world having heard the word Bitcoin. Whether they understand it or are using it is another thing. But we've been experiencing an average of 113% growth each and every year in terms of user growth for the last decade, which is faster than the growth of the internet in its inception days. So we've actually created a network effect that's growing faster than the early days of the internet, which is really just testament to this new sector where you don't just supervise and watch, but by owning Bitcoin or by owning a part of our industry, you financially benefit from any network effect or growth. It's like the biggest IPO for the entire growth of an economy, as it were, which we're seeing, but this global system that exists outside the financial system.
Yeah, imagine if that was the same opportunity with the internet days. With if you benefited from every time the internet grew, right? Sort of the same way as you could benefit from every time the Bitcoin and crypto market's growing. You technically benefit from it if you're involved, but think of that if you were involved at the beginning of the internet.
Yeah. And the irony is that most people that participate are doing the exact opposite of what it takes to benefit from that. They do excessive speculation. They try and trade in and out. They create taxable events for themselves. They try and guess. They try and call the tops and bottoms of all these different coins. And the wealthiest in the industry, the people that have had that are making the biggest impact in the industry, didn't, just avoided enough of that to still maintain a position. And it truly is, the opposite of what many people, this was the only industry that I know of that front run Wall Street. People were in it before Wall Street were in. They're getting into it now. So it's just really exciting to see that. But at the same time, everyone that joins, they go through their natural education of doing all these things that are detrimental to being involved in this industry. But still, they have to go through their own educational cycle.
Absolutely. We're seeing, massive adoption. You mentioned adoption earlier. Do you think a part of that adoption is the kind of element where you do see people coming in to buy and sell and trade because their friends are doing it from a speculation space? Or do you see more of this adoption from, like you said, peers, people, demanding and requesting for more investment options, more ways to trade, more ways to make payments? where do you see this whole, or is it the whole thing from this phase of adoption?
Yeah, so when I think about Bitcoin, and the reason I got involved in Bitcoin was I said that it solves three problems, and this was the first presentation I gave at the very first Bitcoin conference in Europe in 2011. I said that Bitcoin solves three problems that exist in the traditional system. The first is when you deposit your money with a bank, the bank becomes the legal owner of your money. With Bitcoin, you take legal title over your money. Now, most people don't fully appreciate that until they try to spend their money and then they realize that they need to get permission to spend their money. When normally that happens when you try to do an international transfer, or you try to send money to a particular charity or organization that might be politically censored for some reason, or maybe you just try to send money to somebody that happens to have the same name as somebody that is on a sanction list, and then you realize that you don't own your own money. The second thing is that because banks have the ability to own your money, they can prevent you from spending your money. And so with Bitcoin, because it's created a peer-to-peer network, you can spend it as you choose. And law enforcement have to do the job of making sure that you're not spending those on illicit means, and just takes out that from the middle. And then finally, you have the issue that's very topical today, which is the ability to ensure that the monetary policy and the money supply is known into the future. And so when you have excessive dollars being printed, and you have the price of goods going up and up and up, and you have this ginormous wealth inequality that's being created as a result of money being used to push up rich people's assets and money being printed away with people over indebted, you get this big wealth inequality. With Bitcoin, you have a fixed supply, and the demand for that supply tends to go up each year as people realize that they want money they can own, money they can spend, and money where they understand that it's not going to be, the value of it's not going to decrease as a result of more and more being created. Couple that with the innovation that's been built on top, where you can use some of that technology and principles to create every single financial product in an alternative way, where you can take money that you can own and money that you can spend, and you can engage peer-to-peer with somebody else in what's known as a decentralized financial product. Then you have the making of the reinvention of the entire financial system, which is very, very exciting to see. So when I think about Bitcoin, its demand is driven. So when people often ask, well, what is Bitcoin adoption? What does that actually mean? Well, it means that people are discovering the need to own their own money, and people discover that when you have things like political uncertainty in countries, closing banks, you have bail-ins, you have all sorts of challenges that are happening on the geopolitical environment. What about money you can spend? Well, that's when you realize that you're trying to send some money to somebody, and you get some kind of censorship. We've seen lots of use cases of that over the time. And now the latest use case is people discovering money that has a fixed supply, as people start to question, well, where are all these new dollars coming? Why, in this global environment that should be a deep depression and recession, is the value of my real estate and property going up so much? And I can't even, hire anybody right now because all this money is being created to pay for people that are just then deciding, I don't want a job anymore because I've got all this money that's being created and deposited into my account every single month through universal incomes, that people are questioning the system, and that inevitably leads them around, well, where is all this money coming from? That seems to be just complete opposite. Why are stock markets at all-time highs, yet we have this ginormous pandemic, and it's not making sense to people? And so that inevitably leads them to the money, rabbit hole, as it were, the one that I've been on for 2 decades. And then the easiest way to understand that is in contrast to Bitcoin. And so it's like a perfect storm where you've had the internet providing information to people at record levels, the traditional financial system providing the worst user experience for people that are leading them to discovering this new industry. Then that's leading to this perfect storm of people discovering Bitcoin and crypto, leading to adoption. And it's why, for me, people talk about the volatility, but really we've been on a bull market for 12 years with corrections in between.
Right.
And you just look at a chart and you can see this 12-year chart that looks like that with lots of things in between where speculators lose money and investors win.
Right. And Simon, you mentioned 10 years ago, you wouldn't have imagined what has been accomplished in the last 10 years. What's your feeling on the regulation standpoint? Because 10, 11 years ago, that probably was the last thing of ideas or consideration, because it was really about decentralization, getting away from that regulation side. And yet today we're seeing much more regulation, much more governance, which I think is actually a positive, but I'm interested in your viewpoint.
Yeah, so I believe we're going to have a constant tug of war in a cat and mouse economy between companies that absolutely should be regulated, and regulation helps, versus the industry figuring out how to take the companies out of the equation, and therefore leaving on self-regulation where people have to transact peer-to-peer, and there's no one in the middle that you can regulate because you've taken out the middle person risk in that situation. Now, there's good regulations and bad regulations. Good regulations, from my perspective, is ones that protect investors and consumers. So if you're operating an exchange or a financial institution like BnkToTheFuture, where people are investing their money, then having checks and controls to ensure that we're not spending clients' money or that we're treating customers fairly is where regulations is meant to really focus much of their energy. The shift that we've experienced is that regulations have shifted from consumer protections to anti-consumer protections in the eyes of preventing money laundering. And so the important goal of preventing money laundering has been shifted to financial institutions. And the strategy that they've used in order to prevent money laundering is ruin the experience of everybody and make companies hold lots and lots of data that puts consumers' data at risk, so that whenever we need to knock on the door, we can knock on your door. And I understand that that is where the trend is going, but it's ruined the user experience of money for all the people that aren't money laundering. So when I look at the industry today, that drives things in two directions. When you ruin the user experience of traditional fiat money, then you end up with more and more adoption and innovation in the decentralized financial products and decentralized monetary systems. So that will be a ginormous area. But at the same time, not everyone's going to use that. So you get tighter and harder regulations on financial institutions that are performing these activities. And because those regulations are moving more away from consumer protection and more towards anti-money laundering, it drives more and more people into the decentralized and more regulations into the centralized. But I still see that these two industries will boom, because the end result is that because there's ginormous systemic risk in our financial system, many of these centralized banks and financial institutions are going to implode when a new systemic risk is exposed, like it was in 2008. The answer to that is let those go bust and make sure that consumers don't lose their money. How do they achieve that? Well, you let the bank go bust and you replace their balance with a central bank digital currency. And then you take algorithmically all of this technology and artificial intelligence and program it into the central bank digital currency, automate tax collection from multiple governments with multiple agendas in order to try and put that predictive behavior in that. And then you have the other alternative, which is driving adoption there. And I think both of them are going to boom. At BnkToTheFuture, we invest in both centralized companies and also companies that are pushing the barrier forward. And I think the beauty of where the industry is going is choice. So giving people that choice, which keeps a check and control. Bitcoin's like a regulator of the regulator. If the regulator gets too aggressive in the traditional financial system, people have an exit. And so that puts a check and control on the central bank digital currencies and all the innovation that's happening at the corporate level. Then if the decentralized financial system just ends up scamming too many people, creating too many Ponzi schemes, financial products, then the regulated industry puts competition whereby the traditional system will create incredible funds that have to do excessive levels of due diligence as a force to compete with decentralized financial products that are not having the same level of scrutiny, and someone turns up and creates something that makes people lose their money. And I think that's very healthy. And if we try and get rid of one, if you go fully decentralized and get rid of the traditional financial system, then I think you have a less innovation in the decentralized sector. And if you get rid of and regulate away and try and really attack the decentralized sector, then you have a much worse fiat currency, a much worse traditional financial system. It's this choice and this competition that's going to drive the best financial result that the world could get, and record levels of financial innovation in an environment where you're scared of being competed away.
I see so much of that happening already, Simon. I feel like I've just heard from the Oracle for the next 5 years. It's like I see little bits, but so much of that already happening. The growth of DeFi just in the last year alone. And I think you're right in some of those areas, the push forward with the growth and the expansion of that, and at the same time the regulations and the growth within the Wall Street and financial markets all coming together. It's really exactly like you said, all of these things coming together. So you also mentioned a little bit about BnkToTheFuture. For the audience that's not familiar with it, why did you start it? What is it?
Yeah, so BnkToTheFuture was a company that myself and my wife, Bliss Dixon, founded in 2010. And we wanted to create a bank that allowed people to not own, be able to own their own money, spend their own money, and didn't create money as debt. Our philosophy around monetary reform at the time, I published a book called BnkToTheFuture, Protect Your Future Before Governments Go Bust, that laid out what I thought the troubles were in banking and a forecast for the decades ahead, and how financial technology was going to change the world. The BnkToTheFuture was a company that we started because we wanted to create a bank. At that time, it was virtually impossible to create a bank. And so Bitcoin was just starting. We started the same time as Bitcoin, the company vision. And we soon realized that there was no way of creating a bank that didn't operate within the confines and the limitations of the existing system. So we gave up on that vision because in the end, the regulator said, you're going to have to step down as CEO, you're going to have to hire a CEO of a traditional bank, and you're going to have to control people's money, and you're going to have to deposit those funds with a traditional bank that will rehypothecate and create debt every time they issue a loan. So it just wasn't possible. So we were very despondent at that time. We'd sunk all of our remaining money from our savings from work at the time into the company, and we were in pretty dire debt. We decided that we would take our last bit of credit card money and fly over to a conference where it was the first Bitcoin conference in Europe to understand a bit more about how we could use that technology to build our bank. We were completely blown away by what was being built, and we just bet the whole company on Bitcoin. And so we pivoted the company to what the real need of Bitcoin was. Bitcoin was creating this, the way we understood Bitcoin at the time was like a decentralized bank. That's how we understood it at the time. And if they're creating the bank, we don't need to create the bank. Well, what could we do? Well, we could support the companies that needed funding, because there was a big problem at the time. No venture capitalists would invest in our industry. The only people that understood and wanted to invest in our industry were the people that owned Bitcoin. So we took BnkToTheFuture and spent 3 years changing securities laws so that we could offer shares in these companies to investors that wanted to invest in any company that was pushing the barrier in financial innovation. The thing that we did differently is, because we were saying these are shares in companies, we didn't really need to explain Bitcoin to the regulator or anything like that. And it allowed us, it was 3 years to try and secure that registration. But after 3 years, we got that registration, and we were able to take some of these companies like Kraken and Bitfinex and COINPAYMENTS and Bitstamp, Exodus, many of the innovators that were just really early to the industry, that couldn't really find funding. Now, a typical, when you buy shares in a private company, it tends to take like between 7 and 10 years for the investment to mature. So because we started so long ago, it's not until today that we've started to see these companies go from tiny little companies to multi-billion-dollar unicorns. We had Coinbase go public on the New York Stock Exchange, sorry, the NASDAQ. We've had Robinhood go public. We've had Circle announce that they're going public. Ripple Labs announced that they're going public after their settlement, once that's done with. And then every week we're getting new companies that are just suddenly, they were worth a few million. Exodus is now issuing a security token at just $750 million. Bitstamp was acquired, and we got some companies that are offering that have now produced about 20,000% returns at the companies like Kraken as they enter into the public space. So it allows investors to build a portfolio of companies in companies that are building the future of finance. And we also offer things like retirement plans where you can hold Bitcoin, equity, and also yielding products so that you can get returns all within a retirement product. So it puts together the companies that are innovating and looking to sell their shares with investors that want to build a portfolio in the industry.
It's interesting. I used to, going back many years, of course, BnkToTheFuture participated with and supported COINPAYMENTS in a program many years ago. Originally, I think it was in 2015. I looked at it originally as a crowdfunding platform, right? Sort of getting to that audience, reaching that market. But BnkToTheFuture is much more than that, really. I mean, from what you're just telling me, it's much more active, providing additional types of solutions, services, access to bigger markets, bigger audience. It's really great to hear that.
Yeah, so the equity crowdfunding industry was a great innovation. It still is a great innovation to support businesses in raising finance. And some of those changes in securities laws that we enacted when we first started this were with a consortium of crowdfunding platforms that wanted to change securities laws. And that work was done. Later, President Obama picked it up and created the Jobs Act that opened up securities to many more investors. And the effect of that has emerged until the point where it's converged with the security token industry now. So we feel like we did our work in the early days, and it's now just become this huge beast that's disrupting Wall Street. But what we recognized is that the value proposition for us was, if we could help in our way find the best companies that were going to have the biggest impact, and we get it wrong. Some of our companies have gone bust along the way. Others are just trading along. Others have become massive multi-billion-dollar unicorns. But because we understood the industry so deeply, we could siphon through some of the pain of not being able to distinguish between an outright scam and a company that has a great vision and a company that is really reputable in our industry. And I think we're responsible for making thousands and thousands of investors wealthy in our industry. In the early days, we created a fund with Max Kaiser called Bitcoin Capital. We literally paid out thousands of Bitcoin in dividends because we invested in mining. We paid out tens of thousands of Ether from day one. So we really are trying to help them and support them with putting together retirement products and things that help them really optimize their asset protections and tax structures and things like that. And inevitably, they then end up reinvesting it. And more companies come to us to raise finance because we offer those solutions to investors.
Sounds like, in that process, you're really applying some of the traditional financial ideas, but also, where do you see applying these ideas and stuff to support a stronger financial system? I mean, obviously, it's going to include crypto, but it sounds like you really are applying traditional financial ideas to this as well.
So I've always tried to explain complex problems in finance in simple language that everyone can understand. And that's been my lifetime work for the last 2 decades. And one of the problems that people identify in the traditional financial system is the vast levels of debt in the economy right now. Now, debt in itself isn't, from my perspective, the root cause of the issue. It's the way the debt is created that causes the problem. And really, to explain that and then tie it back to why I support this industry is that the system is designed to really, really screw the most number of people and create a wealth inequality gap that I talked about. The reason for that is because money is debt. And if you don't have more debt, you don't have any more money. The banks a long time ago were given the ability to create digital currency every time they issued a loan. So people think Bitcoin is the first digital currency, but no, actually the dollar, the pound, the euro, the yen, the Jap, everyone, they're all digital currencies. 3% of them are cash and coins, 97% of it is digital currency. Every time that digital currency is created, it's created when a bank issues a loan. And so the problem is not debt, it's the fact that we create money as debt that is the problem. And that's a bit tricky for people to conceptualize, but it's how the money comes into existence. So in the early days, way in about 2006, the first financial technology companies we were supporting was peer-to-peer lending platforms. What they did is they operated how you think a bank works. They said, if anyone's got savings, deposit it here. And then we'll take those savings and we'll issue loans and diversify, and we'll pay those returns to you and take our fee. That's how people think, or would conceptually think, banks work. But no, instead, banks were given a license to create digital currency every time they issue a loan. So they take the government's currency, cash and coins, and say, if you want to buy some real estate, we'll lend you $200,000 and we'll create $200,000 as a digital currency. We'll put it in your account. That becomes both an asset and a liability on their balance sheet. It's an asset because they benefit from interest. It's a liability because that money was created and it disappears and they have to repay it when you repay the loan. I don't want to go too deep into that, but if you take existing money that's created in a fair and way without being backed by debt, then debt's not really a problem. It's a legitimate financial product. But when you do it this way, you have all these skewed effects where debt is created and pushed into assets. It pushes the price of assets so they become unaffordable to the majority. And those that are deeper and deeper in debt can never get assets. And so you have this wedge between the rich and the poor, those that have assets, those that don't have assets. And inevitably that creates a systemic risk events like trying to get poor people to take on real estate loans like 2008 financial crisis, or trying to get everybody to do a degree like student loans, or trying to get everybody to take on credit cards. And eventually those lead to these systemic risk events that expose the financial system. And then the government comes in and says, we'll take on all that debt. We won't restructure the system, we'll just take on that debt. And then when the government can't take on the debt because their books don't balance, the central bank says, we'll take on all that debt. So rather than just inject the money, they then do things like quantitative easing. The problem with this is that you have what's known as a debt-based economy. And a debt-based economy means that you get rewarded the more debt you have, because the value of the debt you have to repay is worth less, because money is worth less and less and less in the future. Bitcoin did the opposite. It said, let's build an equity-based economy. And an equity-based economy is where the fundamental values of the money is not underpinned by debt. And so what happened in Bitcoin is you had all these crazy cypherpunks and geeks and computer geeks and crazy people that thought that we could change the financial system. And none of them were wealthy, but they all became wealthy. And what did they do with that wealth? Well, that wealth effect meant they started to reinvest it in the industry. And then we created a multi-trillion-dollar market with not through debt. And even if you look at the debt markets within Bitcoin, what they'd say is, look, we don't care about your credit rating if you're looking to borrow in our industry. They're saying, put up a bunch of Bitcoin as collateral and then we'll lend you. So it's a loan based upon wealth, rather than a loan based upon a credit rating from somebody that can't afford to repay. And so when you have an equity-based system, you have a wealth effect, and then that wealth is reinvested. Whereas the traditional system is a debt-based system that says the more debt you take on, if you're smart enough, you can leverage that to buy assets and then try and get on the right side of the wealth inequality. When we're talking about at Bank to the Future, the traditional system, we're building everything upon the equity capital markets. And so while the debt capital markets exist, which is what the yield products that we're seeing in crypto, they're taking all the lessons from those amazing financial products and reinventing it based upon a sound monetary principle. And so really it's that sound money supply that makes that difference. And it's a nuance, it's a niche. There's a lot to unpack to get to understand that. But an economy based upon savings and wealth, I believe, leads to a superior outcome than an economy based upon debt and using financial innovation to get on the right side of those debt cycles. And I believe that that's the big shift that we're going to be experiencing. The traditional financial system created an incredible amount of innovation to create the world's largest regulated Ponzi scheme called fiat money and keep it alive this long. It's been an incredible feat of innovation. It's quite remarkable if we look back in the history books and see all the things that banks and financial institutions innovated to keep the world's largest regulated Ponzi scheme alive. There's a lot to learn from that. But inevitably, there is the roots of it, which is a debt-based, unsustainable, unregulated Ponzi scheme called fiat currency.
It almost got too big to shut it down, but the reality of it is being shut down. How you expressed and explained the equity-based financing, equity-based sort of banking stuff, I don't think I've ever heard that before, Simon. I hope that more people get the opportunity to really listen to that and hear your description of what Bitcoin's purpose, what its value was from the beginning, and where things are moving to. I really value that insight.
Yeah. And for all of our, and by the way, I'm painting a very rosy picture of our industry. It really is buyer beware. And that's just the self-responsibility of our industry that comes with owning your own money. And for some people, using centralized companies is the best option, which is why we have a buoyant industry based upon custodying your funds and regulating and ensuring that they're custodying your funds safely and making sure that they have contingency plans, disaster recovery, that they're segregating all those assets. So all of those lessons still exist and is still important because some people are not quite ready to go into the wild west of owning one's own money. But the important part here is that if you look at our industry, it created a wealth effect. And the innovation that came from that was things like ICOs, which, unregistered securities. People were investing in those in order to make money from companies. And many made incredible amounts of money and then they got wrecked. But here's the important thing. A bunch of young people that were completely despondent by the traditional financial market, that were never going to own real estate or property, that were never going to figure out how to get on the right side of this debt cycle, for the first time found something that they could relate to in encouraging them to think about savings and investments. And so this whole generation of young people that were never going to save, they didn't want to own anything. They didn't want stocks. They didn't want gold. They didn't want a retirement plan. They couldn't get real estate because they were stuck in their student loans or debt or credit cards or whatever it was. And it was completely out of whack with their income relative to the price of real estate was completely out of whack. And so their inevitable income was more and more debt. They took on their student loans, they took on their credit cards, they took on the mortgage if they could get on the right side of those debt cycles. And that was their thing. So their reaction to that was, don't own anything. Don't own a car. We'll just use Uber. Don't own real estate. I'll just figure out how to share on people's couches and become a nomad.
The sharing economy.
But with crypto, they started thinking about, you know what? I want to take some of those dollars and how do I get more Bitcoin? How do I not spend money so that I can get more Bitcoin? And when I got Bitcoin, how do I put that in this thing that I'm interested in? Call it a token, an ICO, a scam, whatever it might be. But they started thinking about investing, and some of them generated a wealth effect. Some of them got wrecked and learned valuable lessons, but are now on the path to still thinking, you know what, I lost all my Bitcoin messing around with all that stuff, but how do I get my Bitcoin back? How do I get my Ether back? And they're thinking about, maybe I don't want to buy that TV on credit card. Maybe I just want to buy some Ether instead, or an NFT or a DeFi contract. And suddenly we've got this whole generation that were taken out of the debt-based system and thinking about, I need Bitcoin in order to borrow more. I need collateral. I need to save more. I need to stop consuming and start thinking about how I can save and invest. And then when they got that money, all of the financial rails are being built that allowed them to spend that money, use it however they choose, but build upon a wealth effect. And that's to me the most amazing thing our industry has achieved. And this is the future generation. I'm sorry, we all have grandparents, we all have parents, we all have people who are relying upon their pensions. Well, they're going to be looking to their grandchildren when their pensions get wrecked. And so their grandchildren need to have these investing financial skills based upon the things that their grandparents can't quite conceptualize because they're used to things being done in a certain way. And so the older generation are going to be looking to the younger generation, and the younger generation really are captured into this industry. And therefore, if you look at the future of finance, the writing's on the wall. This is where the young generation are. They're not thinking about their 401ks or anything like that. They're thinking about how they get on this industry. And they are innovating and developing, if they're technically minded, at a pace that we've never seen before, by creating these protocols that these young people can all develop upon. My full-time job is to stay up to date with what investment trends are happening in this industry. And I have a team of people at BnkToTheFuture whose full-time job is to stay up to date with it. And we just can't keep up because the innovation is happening so fast, so rapid, and at such a pace.
Simon,
what chance does a regulator?
Simon, you painted quite an incredible picture for the future of banking and finance. I think that people can learn so much from you. It's amazing. So, but let's shift gears for a second before, I know time's almost running up, but you're an entrepreneur, forward thinker. I mean, I can't even imagine being in the same room with you in 2010, 2011 with the ideas and conversations that were happening. So, but what are you finding today? Like most disruptive idea, project, what's caught your attention today?
To me, it's still Bitcoin. And Bitcoin is the most disruptive idea because everything is built upon the principle of having money you can own, money you can spend, and sound, hard digital money. On top of that, you've got the incredible innovation that's happening in Ethereum that is, less dependable, less reliable, but an incredible amount of innovation that's disrupting every single traditional financial product. And then the healthy competition whereby Bitcoin has built sound money, and now people are building layers on top of it that allow them to do some of the things that Ethereum has proved you can do. And then all the healthy competition around Ethereum, where if you don't sort out many of these things, there's another company or another blockchain or another foundation that's coming along and saying, we'll try and do it better. That healthy competition is really, really important. So to me, the most important thing, I believe the underpinning of this whole thing is something that can never be created again. Personally, I don't think we will ever in our lifetime see another shot at achieving digital hard sound money, which is why Bitcoin is to be protected. Bitcoin is to be nurtured by the community. Bitcoin is to be respected by the community, because recreating Bitcoin is something that it was created at a time when it should have felt, if it was started again today, it will have all the problems that we're only able to overcome because it was created at a time when nobody cared, when there was no price, there was no speculation, and those forces is what creates Bitcoin what it is today. And so everything else is gravy on top. Giving the ability to reinvent all these traditional financial products relies upon having digital hard sound money at its core. So to me, the least exciting thing that most people in our industry will probably think is just keep Bitcoin, and keep it at the core of digital hard sound money. Everything else will follow.
Incredible insight, Simon. I really appreciate all your time today, your input. I look forward to next time. I want to hear more about what's next for Simon, what's next for Bank to the Future. I want to know what's going to happen next. I really want to have this conversation more often with you. So I'm sure that people will want to ask you questions, be able to find you. We'll provide some links, maybe to Bank to the Future as well as to you. And I know people are going to want more.
Yeah, and one thing I would say is that when the pandemic broke out, people were saying to me, what should I do with my money? And I didn't have a good question to that because I can't give financial advice. And I was a financial advisor, but I'm not qualified as a financial advisor today or registered to do that. And even then, it requires individual advice because no two people are the same in their circumstance. But what I did do is I said, I answered the question. If I were starting again today with no Bitcoin, no Ethereum, no dollars, no pounds, no wealth, and just a regular income and maybe a bit of savings, what would I do to try and build again? Because people were saying it's okay for you. You were there from the beginning, and a huge element of luck was involved, of course, being there from the beginning. But also today, everything's a lot easier than it was. It was damn hard to be involved in the industry back then. It was so much easier to lose everything back then than it is today. So I created a 4-part video series completely free on retirementplanb.com, where I actually took and said, right, I'm going to take $1 million of my savings, whether it's $1,000, $10,000, and I'm going to start it again from scratch today, and everyone can trace what happens over the next decade. So that free video series people can get at retirementplanb.com, and also grab me on Twitter at Simon Dixon Twit if you've got any requests. I'll try and share that.
Excellent. Thank you very much for sharing, Simon. Really great thoughts. I appreciate your time today. Best of luck with everything. I can't wait to see what's next for Bank to the Future. Thanks for joining on Off the Ledger today.
Thank you very much. And thanks for all the work you guys have done as well, supporting us in adopting all these payments through Bank to the Future, through the technology you guys created.
All right, everybody, that's a wrap. Thank you for joining the Off the Ledger podcast today. Remember to listen to the newest podcast wherever you regularly listen to podcasts. Thank you very much. Have a great day.